Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Noah Holdings' latest report. Noah Holdings Limited offers a wide range of businesses and services, including investment and asset allocation services for high net worth individuals and corporate entities, wealth management services, asset management services, customized value-added financial services, such as plus investor education, plus trust services, plus insurance brokerage services, insurance products, onshore and offshore private equity investment products, real estate investment products, public securities investment products, multi-strategy investment products, other investment products, lending services. The stock price of Noah Holdings has made no significant changes in the past year due to a combination of factors. While the company's overall decline of over -14.22% is notable, several news events and financial reports have provided insights into its performance. Notable declines were caused by the Q4 2024 earnings report, which showed decreased revenue and net income. However, subsequent quarterly reports demonstrated strategic progress, increased profitability, and robust overseas expansion. The company's resilience was showcased in its ability to maintain profitability and drive growth in certain segments, despite a challenging macroeconomic environment. Key events that contributed to this stability include the Cone 2025 earnings report, which showed a rebound in non-GAAP net income, the Q2 2025 earnings report, which reported a strong increase in non-GAAP net income, and the Q3 2025 earnings report, which highlighted strong profitability and comprehensive structural upgrades. Additionally, Noah Holdings' commitment to AI-driven global wealth management, as seen in its Global Black Diamond Summit and the unveiling of its AI relationship manager, Noya, underscores its strategic focus on innovation and growth. These developments likely helped to stabilize its valuation in a challenging market environment. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth. Strong profitability growth, with a 52.2% year-over-year increase. Expansion into new markets through obtaining a U.S. broker-dealer license and integrating AI technology to enhance client acquisition and efficiency. Significant increases in overseas insurance and comprehensive services, 19.8% and 43.4%. Respectively. Rapid growth in overseas asset management and wealth management services, 180.6% and 157%, respectively. Revenue decline. Decrease in revenues from one-time commissions due to decreases in insurance product distribution and performance-based income. Significant declines in domestic insurance, -44.8%. Overseas wealth management, -22.7%, and overseas asset management, -20.8%, negative growth in recurring service fees, one-time commissions, and other service fees. Net income and profit margins experience significant shifts. The company's net income has seen a substantial increase, rising by 62.6% from Q3 2024 to Q3 2025, and 58.9% from 2024 to 2025. This growth can be attributed to the increase in fair value of investments in affiliates. However, profit margins have undergone a more complex transformation. Net margin has increased significantly, rising from 20.2% to 34.6%, while non-GAAP net margin has also seen an improvement, increasing from 22% to 36.2%. In contrast, operating margin has decreased from 35.2% to 27.2%. The decrease in operating margin can be attributed to a decline in revenues from one-time commissions due to decreases in insurance product distribution and performance-based income. This reduction in revenue has offset the gains from increased fair value of investments, resulting in a net decrease in operating margin. The company's financial performance indicates a strong ability to generate cash from its core operations. With an operating cash inflow of RMB 316.9 million, the company is successfully converting profits into liquid assets, demonstrating a positive trend in its operating cash flow. This suggests that the business is financially stable and capable of meeting its obligations. The company's financial health has undergone a notable shift in recent times. A significant increase in total debt from RMB 1,647,295 to RMB 2,083,119 indicates a substantial rise in liabilities. This change suggests that the company is shouldering more financial obligations, which may impact its overall performance and stability. However, there is no clear indication of whether interest expenses have changed significantly, leaving this aspect of the company's finances uncertain. The company's financial performance has been mixed across various segments and regions. On the positive side, domestic public securities and domestic asset management have seen significant growth, with increases of 24.4% and 11.3%, respectively. However, other areas have struggled, including domestic insurance, which experienced a substantial decline of 73.7%. Overseas wealth management and overseas asset management also saw decreases of 10.5% and 37.6%, respectively. Management's outlook and strategy overview. The company is adopting a refined segment reporting structure to better reflect operational adjustments. It is expanding its coverage network in mainland China, with 16 cities included as of September 30, 2025. Additionally, management has obtained a U.S. broker-dealer license to drive overseas expansion. The integration of AI technology across operations aims to enhance client acquisition and efficiency. Furthermore, the company will continue to repurchase shares under its share repurchase program, focusing on capital management. Concerns about inventory buildup and supply chain disruption exist. Our financial summary reveals concerns regarding inventory buildup or supply chain disruption, primarily affecting domestic insurance and overseas wealth management sectors. In the domestic insurance sector, a significant decrease of 44.8% in product distribution has been observed. This decline indicates potential issues with inventory levels and may lead to supply chain disruptions if not addressed promptly. Similarly, the overseas wealth management sector is experiencing difficulties, with a notable drop of 22.7% in allocated referral fees for assisting in the distribution of overseas insurance products. This decrease suggests that there may be challenges in managing inventory and maintaining efficient supply chains in this area as well. These concerns highlight the need for careful monitoring and strategic planning to mitigate potential risks and ensure smooth operations in both sectors. That concludes the financial summary for Noah Holdings. Feel free to comment below, and I will be happy to answer them when possible.